when we hit 60, the model said fair value was 20. It had been up to 30 and it had fallen to 20. Because remember, transaction volume fell and everybody was afraid. And so we got to 3x because of the crazy Binance 100 times leverage and all the stupid stuff. And that's fine. In the previous cycle in 2017, we got to 2 times fair value was 10. We got to 20. Okay, that's fine. So this time, fair value will accrete, according to the model, if things stay the way they are, fair value will accrete to around 100K by the halving. Okay, well, why is that?
That means we go to 300 because we get leverage.
Well, no, and again, I think the leverage is small this time. I don't think we get to 3, but could we go to 2? Sure.
Bitcoin is going to $100,000 per coin by the time of the April 2024 halving, and then leverage and speculators are going to send it to over $200,000 is the message out from hedge fund founder Mark Yusko. Mark Yusko is the founder and chief investment officer at Morgan Creek Capital, which has over $1 billion in assets under management. In his latest interview, Yusko breaks down how he sees Bitcoin playing out throughout the remainder of 2023 and talks through his fair value model for Bitcoin. He argues that because of the 4-year halving cycle, it is programmed into Bitcoin to increase in price following the halving. Make sure to stick around to the end of the video where he lays out his thesis for a 6-figure Bitcoin. Also guys, I have just launched a daily 5-minute crypto newsletter. I was so sick of seeing people charge hundreds to thousands of dollars per month for on-chain crypto data and breakdowns. So to give out as much value to you as possible, I am sending out a 5-minute daily newsletter which will cover expert predictions, breakdowns of on-chain crypto data, and any breaking news that you need to know all in a nutshell. And my promise to you is it will be completely free forever. Click the first link in my description, enter your email to join over 5,000 others in becoming a better crypto investor right now. If you don't like it, I will personally send you $1 whole, so you literally have nothing to lose. Now here's Mark on his Bitcoin outlook.
The market cap of Bitcoin should roughly equal gold's market cap, okay? Yeah. A reasonable assumption. If we say that Bitcoin is digital gold and it plays the role of base money, money, as we know it, is really a small thing. It's gold. Mark, what do you mean? I use cash. No, that's debt. That's a currency, but it's not money. Money is an asset that exists in the absence of a liability. The only thing in the world that does that for 5,000 years is gold. Now, people have dabbled with other stuff, but ultimately all the other stuff that we think of as money is backed by debt. It's currency. And that's why it ultimately devalues and ultimately inflates away, and why in the history of the world there have been 775 paper currencies. 3/4 of them no longer exist. I mean, they literally went away. And the same is happening in real time to the dollar, which is why Larry Fink, like not exactly, Joe from some Twitter handle. We're talking one of the most powerful people in the world, manages, he's in charge of a company that manages close to 10 trillion, with a T, dollars, said that you should put some money in Bitcoin, in my ETF, of course, that will protect you from devaluation of the currency. I mean, he actually said it. And so this is a long answer, Scott, to how do you get to 625?
I mean, that's just 20x market cap from here, right? So gold is 20x our market cap, easy, 600, done.
Exactly. No, that's it. And that's all it is. And now the one adjustment I make is the total market cap of gold is 11 trillion, okay? Total market cap. And, we're about $500 billion in Bitcoin. So total market cap, actually, we're higher than that. What is it?
I think it's 600 or 700. I've got it here.
700.
Yeah, I mean, somewhere in the ballpark. I can get it. Yeah, the whole total now is at 1.2. So yeah, we've grown. It's 581 billion. Yeah.
Okay, so 600.
Bitcoin.
So let's just round gold to 12, because it probably is. And your 20x is right.
20x.
But here's the thing. Half of that gold isn't money. It's jewelry and chalices and, gold leaf and stuff that isn't really used as a monetary base. So that half is 6 trillion. That's a 10x from here. Current price of 30. 10x is 300K. Okay. 300K to me is so easy. We don't even have to debate, because the idea of Bitcoin being better than gold as a store of value, as a unit of account, as more portable, like I say all the time, if I had a bar of gold, which maybe at my other house, but if I had a bar of gold and I wanted to break it in half and send you half, I'm not strong enough to break the bar of gold, first of all. Second, I couldn't stuff it in the computer to send to you. I want to send you some Bitcoin. I punch a couple buttons and you got Bitcoin.
We're done.
So that's a superior store of value and medium of exchange. So I believe Bitcoin gold equivalence is a no-brainer. Now, when? Tomorrow? Next day? I don't really care. Sometime in the future, that's easy. So that's that 300K number. There's a 4-year cycle, and there's going to be a 4-year cycle because it's coded into Bitcoin. Every 4 years, the block rewards get cut in half, and therefore, one of two things has to happen. Either a large number of the miners have to go bankrupt because their costs are basically fixed, or price has to rise. And that's a pretty cool thing because what happens is as the price rises, it attracts attention, right? Movement attracts attention, right? Like if my son or daughter were to, move across the frame in the back, I would look because that's what, we hunters do, and we follow movement. And so what happens every 4 years is we have these seasons. And today we're in crypto summer. Well, what is crypto summer? Summer is the period leading up to the halving, the year before the halving. And what does that mean? Well, that means we drift from below fair value, okay? Now, why are we below fair value? Well, because we had winter 2 seasons ago that pushes the price down. Well, why does winter happen? Well, because people freak out because of the parabolic top in the previous fall. And then we go through spring, which is kind of the bottoming process. That ended, I think, from June to June. And now we're back in summer. Well, if the Metcalfe's Law model that Tim Peterson, that I use, says fair value is 55K, investors, people who buy things below fair value, that's what an investor's supposed to do, would be accumulating Bitcoin here, right? If the price is 30 and the fair value is 55, you would be a buyer. So as that happens, it slowly accretes toward fair value. When the halving occurs, suddenly the price has to rise a little faster. Well, now that draws in speculators. Well, what are speculators? Speculators are people that don't care about the fair value. They don't care about the price. They just want to make money. So they're drawn to the movement. Well, in the fall of the cycle, okay, the year following the halving, what you get is increasing velocity and increasing interest. The media comes in, you got lots of clickbait, and suddenly it starts to go parabolic. Well, here's what happened. Toward the end of that cycle, that fall period, you get the leverage. And the leverage is what causes the parabola. And that's true of look what's happening in stocks right now. Why are stocks going like this? Why is Nvidia going like this? Leverage and short selling and short recovering. That's what it is. There's no chance that Nvidia is worth, in terms of value, its current price.
I agree.
Not mathematically possible. It's a great company. They make great products. They're going to sell a lot of chips to people thinking that AI is going to change the world, even though AI is not new. It's a 55-year-old overnight success story. And, we're all not going to be replaced by ChatGPT. I got news for you. But that's not the point. The point is leverage. Margin debt is accelerating again. And so leverage is causing prices to be crazy. So we're in a parabolic blow-off peak in stocks, I believe. And we will have another parabolic blow-off peak kind of late 2024. Halving happens April, May. By the end of that year,
it's later,
we'll be in the parabolic peak. And look, in the previous peaks, fair value was X. We got 2, 3, 4 times.
Fair value is probably where we're at now in the last cycle. Should have been in the 30s. Probably. Maybe 40.
And that's my point, is fair value, when we hit 60, the model said fair value was 20. It had been up to 30, and it had fallen to 20. Because remember, transaction volume fell, and everybody was afraid. And so we got to 3X. Because of the crazy Binance 100 times leverage and all the stupid stuff. And that's fine. In the previous cycle in 2017, we got to 2 times fair value was 10. We got to 20. Okay, that's fine. So this time, fair value will accrete, according to the model, if things stay the way they are, fair value will accrete to around 100K by the halving. Okay, well, why is that?
That means we go to 300 because we get leverage.
Well, no, and again, I think the leverage is small this time. I don't think we get to 3, but could we go to 2? Sure, right? Because you got the hodlers who are going to hodl. They're not selling. But here's the funny thing. Everybody's like, oh, there are excess buyers in the market. Oh, there are excess sellers in the market. No, there's not. There's always an equal number of buyers and sellers. Every transaction, in every security, in every asset, in every commodity, in everything, always has to have a buyer and a seller. I cannot just buy stuff out of thin air. Now, if I were the Fed, I could create money out of this, but I can't buy stuff out of thin air. So this idea that if an ETF, when the BlackRock ETF is approved, the BlackRock ETF will be approved. There's no question in my mind that will be approved. Everybody says, well, but if the other ones are ahead of them, I don't care. They will not be approved. The BlackRock will be approved. After that, maybe someone else will get approved just so they can kind of cover their track. But BlackRock's going to get approved. So that's going to cause increasing demand. there is a finite supply. So there's the first finite supply, meaning there's only going to ever be 21 million, and there won't even be 21 million because there's been some that's lost or stolen. You got the Satoshi wallet that's never going to move. You got all kinds of stuff. So, and the incremental change in Bitcoins, by some estimates, is about 10, 11% of the coins. If hundreds of billions, which I think is a reasonable estimate, comes into the market, okay? And we're talking, let's say 200 billion comes in, and there's only 60 billion of available supply for sale, price will rise. That's just supply and demand, right? You shift the demand curve, the price will rise. That will cause more people to come in. That will cause some leverage, but I think this time the leverage won't be as great because the scrutiny of the regulators.
So there's Mark Yusko, founder and chief investment officer at Morgan Creek Capital, sharing his insight on the future of Bitcoin and his prediction of it reaching a value of over $200,000 per coin after the 2024 halving. Yusko's forecast, based on his fair value model and the 4-year halving cycle, paint a highly bullish picture for the Bitcoin market. Just a quick reminder, if you want to stay updated with the latest trends, predictions, and news in the crypto world, make sure you sign up for the free daily 5-minute crypto newsletter. Click the first link in the description, enter your email, and join the community of over 3,000 other crypto enthusiasts. Anyway guys, hope you all enjoyed today's video and it provided you with some value. I'll see you all in the next one, and as always, all the best.